Hello everyone. Today we are going to talk about how to create an investment plan. We will talk about it step by step. So the step number 1 is assess your current financial situation. The first step in making an investment plan for the future is to define your present financial situation. You need to figure out how much money you have to invest. You can do this by making a budget to evaluate your monthly disposable income after expenses and emergency savings. This will allow you to determine how much you can reasonably afford to invest. Just don't invest blindly. It is also important to consider how accessible or liquid you need your investments to be. If you might need to cash in your investment quickly, you would want to invest in more liquid assets like stocks rather than investing in something like real estate, which will give you returns after a long period of time. Step number 2 is define why you are investing. What's your end goal? Is it retirement, financial freedom, car, house, etc.? What are you hoping to earn money for? This can be anything from buy a car in a few years to retiring comfortably many years down the road. You must also define your goal timeline or your time horizon. How quickly do you want to make money from your investment? Do you want to see quick growth, or you are interested in seeing investment growth over the period of time? Step number 3 is have a strategy. Like where you want to invest for the long term or short term. Take your time and make a strategy that works for you. There are many different options you can use for your investments. Your budget, goals, and risk tolerance will guide you towards the right type of investment for you. Consider securities like stocks, bonds, and mutual funds, long-term options like real estate, art, Bitcoin, and other physical items. Where you decide to invest, make sure to diversify your portfolio. You don't want to put all your money into stocks or cryptos and risk losing everything if the stock market crashes or Bitcoin takes a dip, for example. It's best to allocate your assets to a few different investment types that fit with your goals and risk tolerance in order to maximize your growth and stability. You can watch my portfolio management tips for deep info inside there. Step number 4 is allocate 15 to 20% of your funds into trading, but this step is optional. Step number 5 is keep a record of all your investments and capital gains. Once you have made your investments, it's not wise to just leave them alone. Every so often, you should check in to see how your investments are performing and decide if you need to rebalance it or not. For example, maybe you aren't putting enough money into your investments monthly and you aren't on track to reach your goals. Or maybe you are depositing more than you need to and you are ahead of your schedule. Maybe you want to move your money into a more stable investment as you get closer to achieving your long-term goals. Or maybe your investments are performing well and you want to take them out and take entry in more risky investments to reach your financial goals sooner. Guys, if you like this video, do give it a thumbs up and subscribe to my channel, and do also give your feedbacks in the comments down below.